Break it down, please, Chris. What really is at the bottom or at the heart of the proposed NAR settlement?
A lot of people assume that the commission structure is set by conspiracy, whatever you want to call it. And so then that offer of compensation would say, okay, if you bring a buyer to the table, you will get, let's say, 2% or 2.5%, whatever it might be.
There is no human, no matter how altruistic, that will not pick up a $100 bill in front of them on the sidewalk.
There will not be a reduction in housing prices as a result of this litigation. The sky is not falling, that things are not going to change that dramatically. There's just going to be a level of transparency.
Hello, everybody. My name is Gurfinkel, and welcome to my Real Estate and Beyond podcast. And today's guest / victim is Christopher Ambrose. Made you laugh. Chris is an attorney and a longtime friend. And as a matter of fact, I've been Chris's client we're just talking about that over 20 plus years.
Yes.
Starting to get a little weird when you talk about knowing people and doing business for that long. But such is life, and life goes on. And I've invited Chris today, and he graciously agreed to talk about the NAR settlement, or proposed, rather, NAR settlement. But before we dive into that, I wanted to read a little bit of Chris's credentials because, seriously, they are really impressive. So Chris is a member of Ambrose Law Group. It's a niche boutique real estate law, lending law group out of Portland and Bend, Oregon. And he's also one of the owners and general counsel of Total Real Estate Group. And it's a Bend-based real estate brokerage. He has a BA in economics from the University of California, San Diego. And his JD is from the UCSD Law School. He's admitted to practice law in the courts in Oregon, Washington, and California. Most attorneys I know are usually Washington, Oregon only, so this is a big plus. So if you do need legal services, you know where to find Chris. Chris's focus in law practice has been on mortgage lending, real estate, and the like for the last 30 years, including entity formation, operations, licensing, finance, litigation, judicial and non-judicial foreclosures, workouts, employee relations, administrative and regulatory challenges, and hearings and dissolution. Not only that, as if that was not impressive enough, he's also been very actively involved with a variety of trade organizations, including the Oregon Mortgage Bankers Association, the Oregon Mortgage Professionals Association, and the Central Oregon Association of Realtors. And Chris is also a co-author of the Oregon State Bar Real Estate Desk Book on real estate lending regulation, and happens to be a licensed real estate broker as well, and is recognized by Martindale-Hubbell as an AV-rated attorney. So all these years of knowing you, Chris, I never knew how much you actually did behind the scenes. So congrats on the book. I'm guessing it's not something super new. And definitely congrats for the recognition by Martindale-Hubbell. I'm guessing that's a pretty high honor and accolades.
It's a professional designation. So yeah, it's good. It's good to have. Thank you.
Awesome. Congrats again. And here is how I feel about without much ado, here's how I feel about the NAR settlement. For the last few weeks, there's been a lot of noise in pretty much print, TV, online, radio, etc., about the NAR, National Association of Realtors proposed settlement, and what changes it will bring to not just the industry that it's associated with, which is real estate. So it's not only affecting the realtors who are practicing and doing great by their clients, most of them, but it's also going to affect the home buyers and home sellers in many ways. And yet the way the media is portraying it is not necessarily the honest to God truth. I'm actually inclined to say that pretty much all of the headlines I'm seeing in the media are essentially a big fat lie and what I would classify as fear porn, because fear sells, good news don't. And it's the fear and it's the misinformation that I really wanted to discuss and address, because again, the amount of misinformation, disinformation, and just flat out lies is frankly ridiculous. on any real estate forum or talking to any regular consumer looking to buy a home today, the stuff they're asking me is just mind-boggling and mind-blowing at the same time. So break it down, please, Chris. What really is at the bottom or at the heart of the proposed NAR settlement?
Sure. Thank you, Ellen. Thank you for having me. It is great to see you. So the NAR settlement, I guess I'll step back a little bit. It arises out of some both civil litigation along with a Department of Justice, federal Department of Justice investigation that was ongoing leading up to about 2020. And the gist of it is based on antitrust, which I'm sure everybody in the world is familiar to some extent broadly with antitrust situations, where it's essentially claiming that the National Association of Realtors is engaging in practices that are deceptive or collaborative in nature that is leading to a variety of claim damages. From a seller's perspective, it's claiming that it is increasing the cost to sellers. It's claiming that it is resulting in an increase in housing prices and right on down the line, depending, of course, on your perspective. So what happened was under the Trump administration, the Federal Department of Investigation, or of Justice rather, conducted an investigation that ended up, this was primarily pertaining to just the National Association of Realtors initially. And the National Association of Realtors, I should add, is, you've probably seen commercials where it talks about, realtor. People use the term realtor loosely, but technically it is a trademark for the National Association of Realtors. Although it's not required, most residential brokers, at least, are members of the National Association of Realtors. So they conducted an investigation regarding primarily the multiple listing services. And so when you go on a Zillow, or somebody does a search on Redfin or Zillow, whatever it might be, they will typically get information that has worked its way through the system that starts with a posting, if you will, on the multiple listing service. That is something that realtors have access to as members of the National Association of Realtors. So as you go through that process, you'll see all sorts of, the list price, of course, the features of the home, right on down the line. I'm sure everybody's looked at that. People have looked at Zillow and they'll find all that information. And then there also there are public remarks and private remarks. Some of as you might imagine, the public remarks are what the general public can see when they do a search for a property. They go out to a brokerage website or whatever, and they see it. And then you have the private remarks section as well. And then within the private remarks section, there is, or had been, still is technically, an area where a seller would provide or identify an offer of compensation that would go to a buyer's broker should they bring a buyer to the table. What that eventually did was enable buyers, brokers to essentially know when they are looking at a property. They can go out to MLS, they can go out to the private remarks, they can find out what the offer of compensation is, and they would know, for example, if the commission is 5%, let's say, if it's not set, and that's one of the big things. A lot of people assume that the commission structure is set, negotiated, set by conspiracy, whatever you want to call it. But really, it's all subject to negotiation. But in some places, it's, let's say, 6%. Other places, it's 5%, whatever it might be. Some places lower. And so then that offer of compensation would say, okay, if you bring a buyer to the table, you will get, let's say, 2% or 2.5%, whatever it might be. So again, a buyer's broker would know as they're going through the process and showing a house what they would be getting or potentially getting should the deal close. What happened then was that the Department of Justice started an investigation, said that NAR is essentially subject to antitrust violations, and that 2020, the Trump administration entered into a tentative settlement, if you will, with NAR that resolved potentially the issues, or at least the investigation with NAR. What happened this past Friday, April 5, was that the Department of Justice, which was trying to reopen it, had an appellate court ruling go in its favor. So, stepping back a sec, essentially the Biden administration said, gee, you know what, we are not happy with this settlement that was tentatively resolved in 2020. Therefore, we are going to try and reopen it. NAR said, no, we've got a deal. You can't reopen it. The Court of Appeals just agreed with the Biden administration and said that, yes, the investigation can be reopened. So that's one component of it, is that the Department of Justice now has the opportunity, should they be so inclined, to proceed with the investigation as well. So that's on the Department of Justice side of things.
So the question that I think a lot of people have, including myself, is, at least those who are in the know more or less, is the commissions were never really set at 6%. And the commissions always could be negotiated. So I guess that would be the media lie number one, is that the 6% commission piece, if we broke the headlines.
Yeah. So then what ultimately happened was, concurrent with this Department of Justice stuff, is not to get caught up in the minutia, but there were class action lawsuits, civil class action lawsuits brought in federal courts back in Missouri and Illinois, and now spread throughout the country, that basically took what the Department of Justice was doing and filed lawsuits on behalf of home sellers and now home buyers. And said essentially similar arguments that the Department of Justice made, that there are antitrust violations, that this was all hidden. And getting back to your question, is that yes, the NAR and a multitude of brokers have said, hey, these have always been subject to negotiation, that there's nothing written in stone that says in an area it's got to be 5% or 6% or whatever it might be. The argument from the plaintiffs, the sellers, and their attorneys, is that, well, that may be the case, but it wasn't particularly clear to the home sellers. Therefore, there were these deceptive practices. And so the claim being that if you are a home seller and a broker approached you and said the commission is going to be 5%, that a lot of the argument, again, is that a lot of sellers believe that, well, that's what it is, and therefore I need to agree to it. And so a lot of the arguments in favor of the class action lawsuits and the investigation are that there wasn't the level of transparency by listing brokers, those who represent the sellers, regarding the negotiations that are possible when you are listing a property. Part of the settlement is, now there are a number of components, as you might imagine, to the settlement, but one of them is that you need to have in relatively conspicuous language in your listing agreement that this is negotiable. And so, people didn't read it before, perhaps they won't read it now, but at least there's language that's going to be in there indicating that it's negotiable.
What really, I guess, confuses and to a point frustrates me is that, especially being licensed in multiple states, so being somewhat familiar with a few states' forms and contracts, real estate contracts, by nature of doing mortgages, clearly not claiming the full knowledge of the real estate forms as a realtor would. But didn't certain states already had very transparent listing agreements that already spelled out what the compensation was and how the compensation was divvied up between the listing broker and the selling broker?
Yeah, so the listing agreement and one of the results of this settlement also are that buyer broker agreements have to be are now required or will be required.
Which is frankly not a bad thing.
Which is not
Let's
a bad
face it.
thing, and which really hasn't been the case because again, because of the way the MLS system was structured, buyers, brokers, put it another way, were not particularly concerned about their compensation because they weren't necessarily looking directly to the buyer to cut them a check at closing, if you will. But listing agreements have always been in existence, and they do lay out what the commission is. Typically, let's say in Oregon, in many cases, it's 5%. And again, that's all subject to negotiation. I want to be, really clear that there's nothing that says it has to be 5%. It used to be, let's say, 6% in some areas. It still is 6%. And
there's plenty of discount brokers who will do it for 1%
Exactly.
and everything, in between, essentially.
Exactly. You have companies like Redfin, for example, that are what I guess would be put in the class of discount brokerage, and they certainly have a smaller percentage. But some people pay. It's not very common, but some people pay hourly. Similar to paying an attorney, so. Like you said, it is all negotiable. But yeah, the listing broker or the listing agreement will identify what the commission is, or if it's a fixed amount, what that is. Part of the settlement, again, now will require buyer's broker agreements. In Washington, there is already a law that went into effect on January 1 that requires buyer broker agreements. In Oregon, they just passed legislation that means that will require buyer broker agreements effective January 1 of 2025. So this was inevitable in any event. I'm not sure how many other states have that requirement, but it's obviously is spreading. And then part of the NAR settlement will essentially speed up the process if it's approved. And I should add that this is all, as you mentioned earlier, this is all proposed. It's not subject to final court approval, and people can object, and even the Department of Justice can object. So we'll see how that plays out. But it's entirely possible that buyer broker agreements are going to be required as of mid-July, whenever the settlement gets finalized, if it gets finalized.
So let's assume for a second, let's just play the what if game, that it does get accepted and it rolls forward. So we talked about the 6% commissions being basically a misnomer at best and a lie at worst. Some of the other pretty egregious stuff that I've seen in the media, in, like I said, whether it's print, internet, etc., is the cost of housing will go down. I would love to hear your opinion. I'll reserve mine for a while, but I would love to hear your esteemed opinion, as I'm sure you have one.
Yeah, well, yes, there are lots of, I'll call them myths that are out there, and a lot of assumptions and a lot of opinions, of course, about how this is going to play out. As far as a reduction in housing prices, certainly some people say, well, I, as a seller, am only going to, or sellers in general, are only going to be paying a lesser commission. And I should add that a lot of people say that it won't change at all, that they'll still say, hey, I am going to provide an offer of compensation to a buyer's broker, and I'll still pay 5%, 6%, whatever it might be. Others are saying, well, sellers are gonna, because they read the same headlines that you and I have been reading, and it's one of the myths where I saw one headline where it essentially implied that there are no more buyer commissions. That's just not the case. It's just that it has to be, there's a level of transparency that has increased.
We'll move on to that one next.
Yeah.
But I'm
in answer to the housing prices, yes, I've seen all over the map. And so in theory, some people say, okay, well, if the seller is only going to be paying, let's say 2 or 2.5% in the commission, that housing price, that they will adjust their housing price accordingly. I just can't believe that would be the case. I've heard somebody else who I've got a lot of respect for, I won't name, say, look, sellers are greedy. And this is perhaps their one, two, three, one of their few opportunities to really maximize the amount that they're going to get out of a sale. So if you think that if a housing price is $500,000 and they're going to be paying a 5% commission, that they're going to reduce it by 2.5%. If they're only going to have to pay a 2.5% commission, then that's just not going to happen. I'm not sure I would call sellers greedy, but certainly sellers are going to take advantage of their, perhaps one of their few opportunities in their lives to maximize their return on a house. And then,
And I don't necessarily think that, greedy is being used as a negative connotation, say, in the quote you were using, because I was just going to actually segue into that. It's not, greed is a human trait.
Sure.
We all want to maximize everything as humans. There's no human, no matter how altruistic, that will not pick up $100 bill in front of them on the sidewalk.
Right.
Or in the case of housing, we're talking tens of thousands of dollars. So
sure,
if you have an opportunity, I tend to agree that if you have an opportunity to net that extra 2.5%, and let's say, average home price being $400K, that's $10,000. Why would you reduce the sales price as a seller by $10K when you can pocket that $10K?
Sure. That's any decent broker, listing broker, is going to do a comparative market analysis or something similar, and they're going to come up with their best estimate on price. And bear it in mind that it's an art, not a science, to a great extent, but they're going to come up with a number, and that is, at least for the time being, is going to be based off of historical numbers. And so when they come up with a number, I can't imagine too many sellers are going to not work off of that number. And sort of
exactly, the prices are not of homes being offered for sale and not based on the realtor commissions.
Right.
They're based on what the market can bear. And then the commissions just come off the top, essentially, at the point of sale.
Sure. And I suppose, in theory, one other argument I've heard is that prices may go down as a result of this, which ultimately would be affected in appraisers taking that into consideration. I've not talked with any appraisers yet who have indicated that they take or will take any reduction in commissions in determining that an appraisal or appraised value for a house is going to be less if the commission is less. I just haven't seen that, heard that. I can't honestly say it may not exist out there, but I haven't seen it.
At least not yet. Yeah. And actually, I was invited into a Facebook group. Yes, I'm that old, and yes, Facebook is the primary communication methods or primary forum placements. It's an Ask an Appraiser group, and there have been multiple discussions since. And the majority of the appraiser opinions that I've seen in it stated that up until now, the appraisal commissions weren't being broken out or categorized as a line item in the comparable grid and not really taken into account because that's already part of the sale price of the home. So some appraisers are of the opinion that from that standpoint, it will not change as well because, again, historically, traditionally, realtor commissions are part of the sales price of the home. Therefore, with or without the commissions, it's still the sales price of the home. And traditionally, the definition of the market value is what somebody is willing to pay for the good or service. Therefore, this is the market price of the home.
I mean, as you might imagine, experts are all over the map, and
yes.
NAR has certainly taken the position, whether I agree with it or not, but their experts say that there will not be a reduction in housing prices as a result of this litigation. So.
I mean, let's face it, supply and demand, you have a degree in economics, I have a degree in economics. Supply and demand is the very basis of any economic price setting, transaction,
sure.
Goods, service, etc., right?
Sure.
So the only reason that we've seen the increase in values in housing in the last few years, essentially since basically COVID, was the steep hike in demand
Mhm.
and supply not being able to keep up with it. So as I usually, when I meet with my clients on Zoom and I explain when they ask me about, where the housing markets are going and I give them my opinion, I usually say, well, supply is like right here and then demand is like right up there.
Yeah.
So this gap is what's driving the prices up. And I talk with my hands. I mean, that's.
Yeah, you and me both. And yeah, certainly there is the high demand and certainly the limited supply, and that's causing all sorts of issues. And we don't need to go off on that tangent, but um, ultimately that seems to be what will ultimately drive the changes in the housing prices, not whether or not a uh, broker is providing offers of compensation or sharing commissions with a buyer's broker. So, and of course, if they try and analyze that, and again, NAR's experts and the plaintiffs and the Department of Justice all have their experts about how this will affect the housing prices. But it's really tough to predict. I don't think any of these experts can safely say they know how it's going to play out, because you have a lot of brokers, for example, even saying, look, 5% still or 6%, whatever it might be, still makes sense. That it still makes sense to provide offers of compensation to buyers brokers. Now, this settlement will absolutely affect how buyers brokers get their payment. Maybe it's an offer of compensation from the seller. Maybe it's one of the alternatives that buyers have. But good luck predicting that.
Let's go back for a second to again, in case you can't tell, but yeah, the 6% commission headlines and 6% commissions going away really does kind of stick in my side like a thorn. Because it's never really been a 6%, not just because it's negotiated or negotiable, but the 6% doesn't go to one agent. And that's, I think, what a lot of people don't understand. A lot of consumers don't understand how that commission, that the realtors are not making bank on that 6% effectively.
Mm-hmm.
So how is that normally broken down? Because I know it, you know it, but I really would like to get it out in the open to more people.
Sure. And one of the components of the settlement and the Department of Justice investigation and all of this litigation pertains to this duopoly, if you will, where it's essentially a scenario where the sellers have been, I'll call it sharing their, or the seller's broker, listing agent rather, has been sharing the commission that the seller will be providing. So if it's 5%, then it typically would be split equally, not always, but 2.5% to the listing broker, 2.5% on the buyer side. Now what's going to happen is that's not going to be assumed. So a seller may say, look, I'm still going to pay 5%, and I am willing to provide an offer of compensation to the buyer's broker for 2.5%. What a lot of people are thinking is going to happen is that the sellers are going to say, no, I'm going to pay 2.5%, and I'm going to leave it to the buyer's broker and the buyer to determine how they're going to get paid, or the buyer's broker is going to get paid. There can be a fixed amount. There can be a percentage of the housing price, some combination of the foregoing. But now that all has to be set up in advance. That's one of the components of the settlement agreement, is that a buyer's broker needs to have a written agreement with the buyer in advance of showing any homes, which will definitely be tricky. But it's something, I think statistically they say something like 40% of buyers brokers have written agreements in advance. So that other 60% is going to have to get used to it sooner rather than later. But
so in essence, like I said, yay to the buyer broker agreements.
Mm-hmm.
But the transparency on the buyer's broker's compensation just effectively went flying out the window?
Well, I wouldn't say it necessarily has gone flying out the window, because now the buyer is going to have to sign off on an agreement up front when they retain a broker, whether it's an exclusive broker agreement, basically saying you will get compensation no matter for, let's say, the next year if I buy a house, and you will get either a fixed amount or 2.5% or 2%, whatever it might be. And or they do it on a per home basis. So that is now going to be required up front. The tricky part really is not so much the identification of what it is, it's how do you make that arrangement right now. And on the lending side, that there are all those issues now regarding what concessions can be allowed. VA loans has
and we'll talk about that in a minute. But I think what I was referring to, the lack of transparency, is that right now, the way the system has been for all these years that you and I have been in business, for example, is it's very clear as to what the amount is. And even to the general public, whether they know where to look for it or not, it's still clear if you were to actually search for it, that the buyer's agent's commission, the BAC, is 2.5%, 2.25%, 2%, whatever the value may be, but it's very transparent going in. And what I'm saying, or what I'm referring to about the transparency flying out the window, now that piece being removed by the NAR settlement, where it's no longer going to be noted in the MLS, then how does one know what their buyer broker, buyer's agent is going to get paid? So that's the piece of transparency that I think is, if anything, that's the piece of transparency that really made the most sense, as opposed to maybe in addition to the buyer broker agreements, but not, I guess one doesn't replace the other, in my opinion.
Yeah, some would call it a loophole. I'm not sure I'd exactly call it a loophole, but one of the components of the NAR settlement, at least, is that you can't have that offer of compensation on the MLS, but you're not precluded from having it as a broker, as a listing broker, on your own website for your own listings, on marketing materials for your own listings. Brokers, still can pick up the phone or text and find out in advance what it is for a home, for that particular home, whether or not there's an offer of compensation or seller concessions, whatever it might be. So there are ways to be able to find out that information. It just may take a little bit more work on the part of a buyer's broker to ascertain that information. And again, this is a proposed settlement, so maybe that will change. But at least right now, there is the opportunity to identify that, or to indicate, look, there is not going to be any buyers, any offer of compensation to a buyer, which again, going forward, still doesn't mean that can't be part of the negotiations, but at least, up front, that might change.
So speaking of the buyer broker agreements, and as you started to segue into actually probably the biggest bugger, I would say, or the biggest fly in the ointment really of the NAR settlement, is what I refer to as the unintended consequences.
Sure.
And that's how the commissions right now are not viewed as a seller concession. And that's actually an industry term for both real estate and mortgage. And to most lay people, most consumers, they don't understand or don't know that there's actually a cap or a limit on how much the seller can pay on their behalf. And that limit is not only highly regulated, it's also highly prescribed, so to speak, where in conventional loans, it can be no more than 2% in some instances, without diving into the nitty-gritty of it, but not more. So, capped at either at 2% or at 9%, and a few in between. And with FHA, it's 6%. USDA, I believe off the top of my head, is also 6. And then VA, which is a whole other subject, is 4. And that's where it's this proposed settlement. And again, that's where the media is not talking about it. It is going to hurt the consumers, especially the lower income consumers, and the first time home buyers. Because if they have to compensate their own buyer's agent out of their own pocket, they're already scraping barely enough for a down payment, and they need the seller's help with seller paying for closing costs, and that's the concession. That is literally that seller concession. But if now on top of it, they have to also pay for the buyer's agent, now what?
Yeah, and that's, I think, the biggest frustration that I've seen, at least from my perspective, are first-time home buyers, how this will affect first-time home buyers and new investors, low-income individuals who, as you said, do scrape by to come up with just enough money to be able to cover title, escrow, closing costs, their share of those costs, along with their down payment. And I haven't seen any great answer to that other than they will have to adjust, and there's going to have to be some creativity between them and a willing seller and their broker, or they reduce their market efforts, if you will, and how high of a price they want to or have been previously been able to pay for a house. So, maybe that they've saved up enough to be able to come up with a sufficient down payment and all the closing costs associated with the purchase of $500,000. Maybe it drops to $450,000.
And that's honestly, that's a wishful thinking if you're in the Portland Metro, because going down a grade, so to speak, in purchase price, there's just no inventory.
Sure.
I mean, there's little to no inventory at any price point. And then the lower on the pay scale you go or price point you go, the less inventory there is. And it generates even more competition and multiple bidding as a result on each of the lower price homes.
Yeah, not only increases the bidding, but look at the scenario where, in this day and age especially, there are reasonable minds can disagree on what level of service a real estate broker provides, but for a first time.
That's like a whole other conversation, right?
Whole other conversation, and I certainly am biased towards what they do provide. There are tons of reasons to have an expert in your corner on both the selling side and on the buyer side. That being said, there are certainly individuals that have purchased 3, 4, 5, whatever number of homes. They're an investor that's been doing it a long time. Perhaps they're okay with just hiring a consultant, and that's an option too. Not a first-time home buyer who doesn't know where to start and how to approach it, and Absolutely.
Are the most likely consumers to be taken advantage of, as far as I'm concerned.
Absolutely. So they find a house for again, I'm not going to necessarily pick an area, but wherever they are, they find a house for $500,000. It's their ideal house, and they realize, gosh, I have scrimped and saved, and this is what I'm able to do, and I'm just going to barely be able to make it work. And then they reach out to a broker, and the broker says, oh, gee, by the way, I'm willing to work with you, but it's going to be X amount that you are going to have to pay unless the seller is willing to pay it. They find their ideal house, and they realize that there's not going to be any type of offer of compensation or assistance from the seller. So, what are their options at that point? They continue to try and work out a deal with their broker, or they decide, well, gee, you know what, I'm going to go without a broker at that point in time, which not a great idea, but gosh, you certainly can see it happening. That person, they find the ideal house, and they just kind of figure on a wing and a prayer that they're going to be able to close the transaction essentially.
But wait, if they've signed an exclusive buyer agreement, they may still be on the hook for the commissions, though.
Very true. And that's where it's going to be tricky right off the bat in having that discussion. And maybe tricky is a little strong, but it's going to take an education. I can guarantee you there are a lot of brokers, for example, up in Washington, those that have been doing buyer broker agreements forever, who will tell you, look, it's not that big of a deal. I've been doing it forever, and I will continue to have that dialogue. I think that even those that have been doing those agreements for a long time will have to admit that because of the change in structure and the sellers not providing an offer of compensation um, through MLS anymore, are going to have to admit that it gets, if nothing else, a little bit trickier. Doesn't mean it can't be done. I mean, you and I went through the changes in Graham Leach Bliley back in, the mortgage industry back in the, 2010, 12, and the 90s. And so it'll work itself out. But
It always does, but in the meantime, it does create a lot of fear. Can you imagine if the internet was around when those changes that you just referred to, the Dodd-Frank and the GLB before, when all of that was going on?
For sure. And
the fear mongering and the lies and the misrepresentation.
Absolutely. And hey, I've got, nieces and nephews that are looking at their first time homes, and they've reached out and, oh my gosh, what am I supposed to do now? And tell them the same thing that I told you. Well, for one, I am in a position to be able to help them a little bit more than perhaps others. But that being said, it definitely will be more difficult, I believe, for first-time home buyers, new investors, and those individuals that are, barely able to get the home that they're looking for, especially if it's their dream home. That's really going to be tough.
Absolutely. I mean, like I said, I see the hardest hit groups by the outcome. Yeah. The proposed outcome is the first-time home buyers, the lower income first-time home buyers, and then as a separate class, the VA buyers. And I understand. So the reason we bring up the VA so much, actually, I think we've mentioned it now 3 or 4 times in this conversation, and I kind of saved it for last almost, is because VA regs, VA guidelines, what we have to go by to obtain VA financing for a qualified veteran, it strictly prohibit and expressly prohibit the veteran from paying a real estate commission out of their pocket. So that's one specific group of buyers that's going to be affected. And yes, I understand that there is the lending industry, the real estate industry, all of our trade groups, all of, the big boys and girls in our respective fields are reaching out to FHFA, which is the governing body for the conventionals, to HUD, which is the governing body for FHA, to VA, which that says itself, to change the regulations and requirements on the seller concession limitations. But we're talking enormously big government agencies that don't move fast to begin with.
Yeah, for sure. And I did not certainly want to neglect VAs. It is a category that's near and dear to my heart, and this is definitely going to have some, if perhaps not long-term effect, but certainly short-term effect because of the restriction on VA loans. And I do, like you mentioned, I do know that there are lots of trade organizations that are reaching out to the various regulators to get changes, but we also know how the government can work sometimes, and it's not necessarily a quick process. Hopefully they'll move quickly on those particular issues, but a lot of this can be remedied in great part if the regulations regarding the lending side are modified to allow things such as not only the caps on concessions and commissions, but also the financing of broker commissions. That, if you've got 10,000, 15,000, that's going to be amortized over 30 years, and that can be added to the loan amount. Perhaps that's an option that a buyer might be interested in doing. And ultimately, the more options that a buyer has, I think the better for everybody.
I agree with that. The more options, the better for everybody, and it's always been the case. I think the last, I guess, subject matter, I wanted to hear your opinion on it. This one I tend to agree with. And this one has not necessarily been seen in the headlines. Um, but the sellers who will not be inclined, and I'm being kind, to pay the buyer broker compensation, buyer's brokers commissions, I tend to agree with the opinion that those homes, especially in the price point of the first time home buyer or the first time maybe move up buyer, uh, those homes will simply sit on the market longer and eventually will either have to take a price hit, because the longer the home sits on the market, the more of a price hit it takes as time goes by, or they will have to eventually change their thinking and eventually succumb to having to pay for the buyer broker compensation.
There are a lot of good reasons to still provide, as a seller, offers of compensation that will enable the interest in your property to stay high or higher than it might otherwise be if you take yourself out of or you take your home out of a pool of potential buyers by not offering that offer of compensation. So um, I've seen the pros and cons of that, the arguments for and against. I guess I would just say yes, there are a lot of good reasons to continue to provide those offers of compensation. Um, what I've heard also is that certain buyer brokers will not show homes if they don't have those offers of compensation, which creates all sorts of ethical issues in and of itself. But that's, perhaps human nature, right? And I mean, we need to stay away from steering. Buyers, brokers need to stay away from getting caught up in
Devil's advocate over here.
What's that?
Like, I'll be a devil's advocate here for a second. But if you're working as a buyer's agent with a fiduciary to the buyer, and your buyer doesn't have the funds to pay for your commissions out of pocket, then why would you show the home, right? That's an argument against the steering part.
Yeah, it's and like I said, it's human nature as well. So it's not something there's all sorts of educational opportunities that will be coming up for brokers on how they deal with those kind of situations. But I wish I could say there was a consensus from listing agents on listing brokers on whether or not sellers are going to continue to provide the offers of compensation to the extent that they have right now. But I certainly many have concluded that they will. That and there are plenty of brokers out there that will say that the sky is not falling, that things are not going to change that dramatically. There's just going to be a level of transparency, and like I said, there are a lot of good reasons why. I think the Oregon Realtors has come out with a list of 179 reasons why it makes sense to do certain things or why your broker is valuable to you and so on. So without getting into those, there are a lot of good reasons to continue to proceed with the offers of compensation from the seller side.
Chris, to wrap this up, and thank you so much for your time and your insight, and your thoughtful approach has always been greatly appreciated. You're one of the most thoughtful and reasonable people I know.
Oh, that's very kind. Thank you.
You're most welcome. In your opinion, how do you think actually that the NAR settlement will get accepted? Or do you think we're still going through it will still go through more motions and more changes before we see the final result? And are we really looking at those changes coming down the pipe come June, July, or is it something later in the year?
Certainly not June. If I were a betting man, and this is not legal advice to anyone out there, I would say, and nor is any of what I've said, I suppose, legal advice. But most class actions, I couldn't give you a percentage of it, but most class action settlements get approved by the court, possibly with some adjustment. So it may be that it's not mid-July. That seems, as of this morning, I have not seen that the formal motion for approval of the settlement has been filed with the court. And that will trigger the process. The motion will get filed. People will have the opportunity to object, not just the Department of Justice, not only other parties, but just third parties out there that might be interested. They may be sellers who are part of the proposed class. Everybody will have I shouldn't say everybody, but there will be the opportunity to have objections. If I were a betting man, I think it will be approved, but possibly with some modifications along the way. I think mid-July, I've seen that, and that's what NAR is predicting. I think that's perhaps wishful thinking, but I don't think it's unrealistic to expect in 2024, certainly, possibly again with some modifications. The other one caveat out there is if you're a seller in the past 4 years, don't cut your settlement check yet. I mean, you're not. I think for those who were part of the initial class back in Missouri or Illinois, I think the settlement, or not the settlement, but the judgment was like $1.7 billion with a B, and they were going to divide that up, and I think it worked out to $3,000 to $5,000 per seller who's in that class. For the NAR settlement and other settlements, it looks like it may be as low as $10. So picture it like those little settlement checks you may get from a settlement with some appliance manufacturer or something, when you get a check for 30 cents or something like that, 99 cents. It may end up like that. So you're not going to use it as.
I'm glad you brought it up, because I was just going to ask about that the majority of people don't realize, again, that those class action settlements, they celebrate before, or count the chickens before they hatch, and those settlement checks are ridiculously little. So one of the figures I heard was about $17 a pop, something to the effect.
Yeah,
so
very much. I mean, $418 million is a lot of money, but divide that among millions of people, and it's not going to be very much. And divide that by 4, since it's going to be paid in 4 installments, as I understand it as well. So, divide up your $17 over 4 years. Save it for a down payment.
That's a lot to write home about. Maybe what we should do is get back together and discuss the actual final outcome of the settlement once it does get approved, once we all actually know what we're staring down. Because, like I said, with all the misinformation and disinformation, I would love to see the final outcome and get your opinion on that when it's done.
Would love to. Thank you.
Chris, thank you again. Thank you for your time.
My pleasure.
I'll see you as soon as the NAR settlement is finalized.
I'll be in touch. Thank you.